You're watching Table for Two, where we speak with industry leaders who champion innovation and drive change. Today we're joined by Andrew Wilson, CEO of Senetas, a defence technology company providing high-assurance cybersecurity solutions to defence, government and critical infrastructure organisations in more than 60 countries globally. Andrew, great to see you again.
Thanks, Michael.
In the half-year profit release, you referred to transformative new opportunities across Asia, the Middle East and South America. What can you tell us about these and how they might drive growth over the next 12 to 18 months?
We have been doing quite a bit of business development work in particularly Japan and Malaysia and South Korea, obviously with some of their government agencies over there to uplift encryption in those markets. So it sounds like there's some potentially large opportunities that we're working on and are well advanced. This year's a seminal year for those projects as we demonstrate our capability in proof of concept trials. So we do expect, if we're successful, significant revenue opportunities in 2027 and beyond.
Speaking of the Middle East, you noted that delayed export permits are currently impacting sales to the region. Are these likely to continue going forward?
Look, the export compliance regime in Australia has become more restrictive, so it's taking longer to get export permits for countries in the Middle East and some other countries around the world. We expect to hopefully ship that order in the next couple of months, assuming the customer doesn't cancel the order, given that they've been waiting for it since September. But we expect to resolve that situation so that we can continue business as usual.
What impact do you think the current uncertain global environment will have on demand for cybersecurity? Are there potential impacts for Senetas and your customers?
Well, I mean, war's never good and is disruptive. A lot of our customers are based in the Middle East. I'm sure that they've got their hands full at the moment. But in the longer term, I think it does highlight the need for further investment in robust encryption solutions and cybersecurity solutions such as Senetas's products. So in the medium term, I think it's probably good for business, but very disruptive in the short term. So we don't know at this point exactly what impact it's going to have on some of our shorter term projects in the Middle East. But we do expect over the longer term that business to grow and grow globally.
Understood. You're expecting gross margins to normalise in the second half. What are the drivers behind this, and can we expect a level of seasonality going forward?
So that depends. It was really a timing issue because we had expected to ship that order to the Middle East, which we couldn't ship. So what's happened in the first 6 months is we have sold inventory across to Thales, and the inventory sits on Thales's books. When it's eventually sold to the customer, we receive the percentage share of margin on that business. So we would have expected to receive that additional margin at 31st of December, but the order was delayed. That would have increased our profit margins back up to the levels that we have previously used to. So it's really a timing issue.
From a balance sheet perspective, the company holds a significant investment in Menlo Security. Can you provide us with an update on your intentions for this and what expectations you might have about realising that asset?
Yeah, so Menlo, the investment, as you've correctly said, Michael, is a significant item on our balance sheet. We hold a minority position in Menlo. Menlo is doing quite well. They're growing annual recurring revenue, which is pleasing to see. So the investment is growing. In discussions with Menlo, I'd say that they're probably seeking an exit in the next couple of years.
Okay. You announced the ASX last week that your cash balance at the end of March should be around 15.9 million, which again would grow should you realise the Menlo investment. How might Senetas look to use some of this excess cash?
Yeah, so in the last half, we did return some capital to shareholders. The board is always looking at capital management strategies, whether that is a buyback, whether that is a dividend, whether that is reinvesting it in our existing business, depending on what projects we've got underway. So at this point, I think we can tell shareholders and the market that we are actively looking at capital management strategies and how we effectively use that capital to shareholders' benefit.
Fantastic. Finally, Andrew, there's been a bit of commentary around lately around how the boom in AI is causing a shortage in memory chips. Is that something Senetas is experiencing, and do you expect it to have an impact on your production capacity?
So yes, I mean, that's a point well noted, and we are aware of a shortage of memory chips in the market. we're actively doing lifetime buys of some of those memory chips, so we've got enough to produce units over a period of a couple of years. And in the meantime, we'll be undertaking hardware respins on newer and more easily available memory chips. So it is something we're planning for. So at this point, we don't expect it to have any significant impact on production.
Good to hear. Andrew Wilson, thank you very much for your time today and joining us on Share Cafe.
Thanks very much, Michael.
Thanks for joining us again on Table for Two. For fresh finance news, market movers, and investor insights, head to www.sharecafe.com.au.